Welcome to the CFD weekly overview of the global financial markets. The euro continued to slide against the dollar, remaining under modest bearish pressure. The EU imposed new sanctions on Russia and economic relations continue to worsen. Recession in Germany is unavoidable if the EU bans imports of oil and gas. The British pound weakened against the dollar. The UK's GDP for March, reported on Monday, rose only 0.1%, lower than the forecasted 0.3%. The Japanese yen continued to weaken and is trading at its lowest level since June 2015. The benchmark 10-year US Treasury bond yield, which gained more than 13% last week, is currently around 2.7%. Gold rose last week, touching fresh multi-week highs near $1,970 on Monday, on the back of safe haven flows. Rising inflation all across the world is pushing gold higher. Last week, all major US stock indices dropped. Negative for equities is the move in real yields on the 10-year US Treasury inflation-protected securities, approaching 0%. The earnings season is commencing this week, with big investment banks such as JP Morgan and Goldman Sachs being among the first to report their quarterly results. Oil prices pulled back last week, remaining vulnerable to a major shock if Russian energy is sanctioned. The European Union has not agreed to impose an embargo on Russian oil, but some foreign ministers said the option is on the table. OPEC warned it would be impossible to replace potential supply losses from Russia. However, prices climbed on Tuesday as Shanghai's relaxation of some COVID restrictions eased concerns about Chinese demand. You've been watching the CFD Weekly overview of the global financial markets.